It is time to hit social media for cash tags. For that, we'd like to welcome in Andy Swan, the co-founder of LikeFolio.com. And as Kevin said, we got Jenny Horn with us as well. And we're going to be talking some Foot Locker ahead of their earnings release tomorrow morning.
I am ready for Thanksgiving, but first we have Foot Locker earnings.
But hold on, we've got work to do first.
Pre-market tomorrow, yeah. So they announced very weakened demand 3 months ago on their last quarterly report, and this was actually a surprise. And they cited China, of course, being a huge weakness for this brand. But also, here's the thing about shoes is, Kevin, I think about 5 years ago, people used to not trust shopping online for shoes. That has obviously changed. I mean, I shop online for shoes all the time, and I'm sure I'm not alone. So Andy, I'm really curious to see what your data has on Foot Locker.
In complete agreement once again, Jenny. You're stealing my thunder every time. Here we go. So, LikeFolio data on Foot Locker, very, very weak. We look at purchase intent mentions, which is people talking about shopping at the store, shopping through their digital platforms, and you can see the drop off from a year-over-year basis. The red circles are 2018 Q3 and Q4, and then that same two periods circled for 2019 on the far right, the far right bar being the pace for Q4 so far. Really down, really nasty. We kind of see a couple of reasons for this. As Macy's confirmed this morning, not many people are going to malls, which is where a lot of Foot Locker stores are. And then just like Jenny alluded to right now, or just a second ago, companies like Nike, which, accounts for an enormous percentage of Foot Locker revenues as Nike products, Nike going direct to consumer in a very effective way has essentially cut out the middleman, which is Foot Locker. So Foot Locker kind of finds itself in a really tough spot. It's, not very useful to the brand anymore. It's not really useful to the customer anymore. And their stores are in a spot where not many people are going anymore. So it's a really tough spot for this company heading into this report.
Andy, I think Nike is the key when you're talking about Foot Locker and their evolution as a company going direct to consumer, and the rumors that you're hearing out there that Nike's talking about going into Targets, right? Nike kind of adjusting their game plan away from the malls and towards the big box retailer. And if they choose Target, that's going to be another death blow to Foot Locker as well.
Yeah, there's a lot of reasons to not sell shoes through Foot Locker, and there's a lot of reasons to not buy shoes from Foot Locker. So what is Foot Locker's future? It's pretty tough to see. I think, this could be one where a year from now we're talking about them trying to reinvent their business. So a lot of headwinds for this company. It's tough to see how they come out with anything really positive from this call, especially I think there's some new tariffs underway specifically on shoes. It's kind of like everything is going against them. A lot of that's known, a lot of that's priced in, but LikeFolio data is confirming at least that there's less consumers talking about buying from the company, and that's an edge that we do have coming into this report.
Andy, you guys have been on this kind of narrative around Foot Locker for a long time. I basically feel like this is the same conversation we've had quarter over quarter over quarter, and it kind of seems now like the market's maybe finally listening to some of that and starting to make those same kind of conclusions when you have a stock that's been cut in half over the last year or so. At what point does it get to the point that it's been oversold enough that it is fully priced in, or do we still have a little ways to go from your guys' standpoint?
Yeah, I'd say, probably $17 below where it is now, somewhere in the mid-20s. I think you could possibly make that argument. Look, in the short term, I think it's possible. Anything's possible. The company could come out with something. The stock pops to 50 or something like that, kind of like we talked about as a potential outcome for Macy's yesterday. That didn't happen, but you do have to be ready for that. I think, from a trader's perspective, you have to be ready for some type of pop. But from a long-term perspective, those headwinds aren't going anywhere anytime soon. And so any move to the upside I think of as an opportunity, and a move to the downside is kind of gravy from here.
Yeah, and we talk about all these headwinds with these brands, but the company did come out and the management expressed optimism in late August that we'll possibly have strength going into the second half of the year. But if you look on social media today, it is not reflective of that at all. I mean, no one is tweeting about Foot Locker, and I was thinking, I don't even remember the last time I saw Foot Locker, probably because, like Andy said, they're so often in malls. So, I mean, not only are people not talking about it, I don't see them, it's not really a relevant brand anymore. So our first tweet says, Foot Locker got crushed when Nike started working directly with Amazon. No response when Nike dropped that relationship. Foot Locker remains a 15% customer for Nike and an important distribution relationship. So this is really interesting because Nike has now eliminated their relationship, of course, with Amazon. But I mean, is it even good enough news for Foot Locker, Andy? I'm curious because it seems like Foot Locker has kind of shrugged off this news.
Well, I think that the risk really is that, Nike's showing that it can just ditch these resellers like Amazon means that Foot Locker may be next in line. I mean, if Nike's really serious about direct to consumer and going through, other retailers like Target, potentially Walmart, then where does that leave Foot Locker? And so I think that the risk is more on the Foot Locker side of the equation than it is for anybody else, because I think what Nike's shown with this Amazon move is that they can be pretty nimble and they aren't reliant on any one retailer. So they can really either squeeze the margins out of these guys or cut them out completely.
One, Andy, doing this kind of just like a thought experiment out loud here, what incentive is there for someone like me or Jenny or you or Kevin to really go on a Foot Locker when you can just go to Nike.com unless they're heavily discounting things and making it cheaper than Nike.com? And that's just going to be kind of the death blow to themselves over time. But I believe last quarter reading this, it was something like 2/3 of their product mix, Foot Lockers that is, was a Nike product. So, as Nike continues to build out that, I mean, it's a no-brainer that it's a negative impact on Foot Locker. It's just a matter now, how long is that going to take? Can they reinvent themselves in that time frame? And to your point, you're seeing a pretty, clear path negatively that for them over time, but it's the short-term question that's a tough one.
Yeah, I think the short term's always tougher in some of these than the long term because, like Jenny said, I mean, the company could come out with some positive thoughts. They could have big plans. But what we see are real overarching consumer macro trends that are just in the face of this company, in a really, really strong way that is actually accelerating and not declining. And so, for those reasons, I think you have to lean a little bit against Foot Locker in the long term. But yeah, short term, anything can happen, and traders have to be nimble and risk defined in these short term type of situations.
Two things that this economy is attacking, right? Middlemen and margins. Mm-hmm. Both those are really the essence of what Foot Locker does. Right. And so it just doesn't paint a very good picture. Even if tomorrow is a good number and the stock gets a small lift, I don't think the long-term situation, it doesn't make it any better going long-term.
I think there's a third thing you can throw in there too, and that's malls. Yep. Malls in general have been getting attacked by this economy too. It's another thing working against Foot Locker, but we'll find out when they do report tomorrow morning really how this company is looking to defend against these different headwinds. But Andy, I'll just kind of wrap it up here. From what it sounds like is you guys are really hoping for some type of good news so that you can enter some type of a bearish outlook position at better prices.
Yeah, we've been bearish on this name for quite a while, so we're in a pretty good spot already. I wouldn't mind seeing it go ahead and accelerate down, but if we do get a pop, I think that's an opportunity for new investors to start looking at a potential bearish position.
All righty, Andy. Well said. We'll leave it there, and thanks to you as well, Jenny. Thanks to Andy.